thank you for making it to the afternoon session. I know it's the graveyard shift, so it's going to be hectic, but we'll keep you entertained. So thanks so much. I think it's important that you first of all know who we are before we delve into the topic. But let's start there. First of all, as Chipo introduced me, I'm Chantal Maritz. I'm from PwC. I've been involved in payments for quite a while, won't give my age away, but it's an interesting topic. And when you start talking about the emerging trend, is it emerging or is it here already, about digital assets, it's important to understand what we are talking about and how it influences what we do in our daily lives. Now, I think the first thing to consider is what is digital assets, but I'm going to skip that portion because where's Paul? Paul went into detail, so all of you, we can test you on it. You all know the answers and you know where the future is going. But I think it's important just to consider what it actually does and how it's impacted in the adoption factors. And I think adoption is important because necessity is what drives innovation at the end of the day. And it's also important to consider how it impacts monetary policy. I know it's not the most important or the most popular topic in the room, but if, yes, it's instant, if you think about all digital assets, why people are actually adopting it, what is it doing to the traditional banking system? And this is why we're having the topic and the discussion today.
All right, thank you so much, and thanks for having me again. So I thought you were going to do that earlier, but anyway. I'm Yaliwe Mlambo, and I've been in the blockchain space for some time, I think since 2016. Started off just out of curiosity, but also trying to find something that would make me relevant. I was in the oil and gas industry, and I wanted something that would make me relevant for the future, not just for that moment, but what does the future look like? So I've served with a number of blockchain organizations. I chair the United Africa Blockchain Association, president of the Stellar Southern African chapter. But most importantly, I'm a self-taught lady in blockchain. So I think I want to give myself props for that because I took a lot of time, to learn and create a curriculum that pushed me to the boundaries. I'm Ethereum DevCon alumni. So I think in 2018, I was given a scholarship by, I think it was 2018, I was given a scholarship by the Ethereum DevCon community, and I emerged top learner in Japan. I am one of the top 100 most influential people of African descent by the United Nations, top 200 people, Black women to follow in Hackathon. I don't know either, the list keeps on going on, but I have paid my school fees to be able to be recognized within the space.
That is phenomenal. That deserves a round of applause, eh? Awesome.
Yeah, Marius, Reitz. Firstly, just thank you for the organizers. I think we can see the attendance is still growing after 11 years, so that's really, really great to see. People often confuse me and Marcus, who's the CEO. So I'm not the CEO of Luno, I'm Marius. Yeah, so I joined Luno in 2016, and I've got an accounting business rescue background, and so I joined a BitX back then, crypto startup still. The company just received funding from NASPASH. It was a really exciting prospect for me to join the business. And as you're doing startups, you get involved in all different aspects of the business. So very early on, I think 3 months after joining Luno, I've got on a plane to Nigeria, to host a crypto meetup. And it was 300 people filled the room in Lagos in 2016. We've been at it for around 12 or so years now at Luno. My focus is on our African strategy and African operations, so I'm the GM for Africa, but I also head up Luno's institutional products and institutional focus. So we now process more volumes through corporate and businesses and institutional clients than we do for retail customers. And so my role also is to help drive that adoption and to engage with institutions in SA.
Awesome, thank you so much.
Thank you. Thanks for having me here. It's always a pleasure to be back at Blockchain Africa and Chipo. You did a great job pronouncing my name. No one gets it right the very first time. Well done. So, and I see a lot of familiar faces, so I'll keep it short. I'm Badi Sudhakaran, co-founder of Valor. My journey started in tech. I started as a software engineer at yahoo.com way back when, and then moved around the world, worked in different parts of the world, from China to Israel, and finally ended up in South Africa. Many people ask me why you ended up in South Africa. I always say for love. So I followed my wife here. So I don't have any regrets. So great to be here for the past 15 years. Moved around different organizations doing fintechy stuff, and finally took a big plunge into crypto industry about 8 years ago. And really, getting into crypto was, for me, not about hype or speculation, but it was about using technology to make finance borderless and fair and programmable, and give everybody access to the same kinds of tools regardless of where you are. And that's the mission with which we started Valor in 2018. So it's been 8 years, and we're still going strong, and we're the largest exchange in South Africa in terms of trading volume. So, and I'm really proud of the team that we've built and all the products that we are putting out into the industry to make it more accessible to the people in Africa and rest of the world.
Awesome, thanks so much. Okay, so now we've got the panel with all the answers. So if you've got questions, please prep them. We're going to ask them these lots of intense questions. But I think the thing is that there's a lot of insights, there's a lot of information, there's a lot of theory. But today we're actually going to have a quick fire round. Let's make it real. Let's understand what are these key trends that we're talking about. What do we need to know? What are the big risks? What are the big investments we need to make? And what do we need to consider? Because this is not something happening in isolation. It actually needs to integrate into the system. And how are we going to make this real? So let's start at the top, and let's start on that end. So Badi, maybe let's talk about some of these global trends, the things that you're seeing, and what should we be thinking about?
Cool. It's a long story, but I'll start with the end. So because you've already been badgered with some of these key trends since morning that I've been listening to many speakers speak, there are two things, tokenization and stablecoins. So that's the climax, but let's start from the beginning now. So it all started, crypto evolution started off with when Satoshi Nakamoto published the Bitcoin white paper. It was meant to be peer-to-peer electronic cash, and with fixed supply, so as a hedge against inflation, right? But what happened was fascinating. Bitcoin proved to be more of a store of value than a payments network, so it became digital gold. So that's the first stage, and there are 4 stages. So the second stage is when Ethereum launched. It was a big leap. So money could now follow certain rules based on a smart contract, right? So now people were able to lend, borrow, and trade and create a complete ecosystem without any intermediaries. And that turned money from being something static to something programmable, right? So that's the second stage. So Bitcoin was one, and then Ethereum was the second stage. And then the third stage is when many of us got into the industry, including me, is the I call it the creative chaos phase. That's when there were tokens everywhere, ICOs, DeFi, NFTs, DAOs. It was quite an exciting period of time, a lot of innovation that happened there. That is the time also where governments and institutions started paying attention to this quote-unquote blockchain technology, right? So they were experimenting with things like CBDCs, doing things with supply chain management and putting property rights onto the blockchain. So all of those were experimental. But one theme from that stage still lingers, which is tokenization, right? So that is when, this is the fourth stage where we're coming back full circle to payments, right? We are talking about stable coins being woven into the financial fabric and tokenization is the buzzword where you can tokenize everything. So now we started with Bitcoin as freedom money, but now we have freedom of movement of any kind of money or any kind of asset with tokenization. And why tokenization is so important is because it makes it more accessible and it creates an infrastructure that's more inclusive because anyone can access some of these assets that were unavailable previously to a certain class of users, certain certain people who didn't have a certain amount of wealth or status and things like that. And that's really exciting. So I would say stablecoins and tokenization, we are at in the middle of that stage, and exciting things are still happening, just like you've heard throughout the day today.
Thanks so much. And it just also shows necessity is driving innovation because it's what people need, what organizations need. But it's great if we see this happening globally, but is it really playing out in the African story? Because, you know, we always sitting here and we think deep, dark Africa, it's always different. So Marius, you drive your Africa strategy, you know what's happening all over, you jet set all over the show. Can you tell us, is it really different?
Yeah, so I think in the early years at Luno, we also grappled with this greed versus the need drivers that fuel the industry, and you know it is so that the early speculators and investors in the broader crypto digital asset industry really fueled and now enables the need use cases, and for us to build products to serve the need use cases. And my travels in Kenya, Uganda, and Nigeria in these markets, I get to speak to people on the ground and to hear more about the challenges that they experience. I remember, quite clearly when I joined Luno, the Naira-dollar exchange rate was 150 Naira to $1, and that's now 1,500 Naira to $1. That's in 10 years. So if you do that, I think that's around 700% depreciation over the course of 10 years. And Nigeria's inflation rate currently is between 30 and 40%, and that's probably not the lived experience. I would imagine the lived experience probably is around 50 to 60%, right? And so stablecoins have now stepped in, and it's providing Nigerians with a real alternative, to firstly store their value. So there are multiple use cases emerging, and then secondly, it's also fueling a real corporate remittance use case. Discussions with corporates, and this is a use case that's currently playing out in real time, especially in sectors like the agriculture sector, where you have large mega farmers and agricultural businesses that export their goods and their produce across multiple African markets, but they cannot get access to hard currency, US dollars in those markets to receive payment. That's an industry that's developing real time in front of our eyes. It's led to the creation of new business models where import-export agents are now facilitating trade on the blockchain through stablecoins. So I think the stablecoin use case is massive, and if you read up about the Chainalysis data, the reports that publish, you'll see that the share of stablecoin volumes on chain in Africa is increasing year after year, which is indication of adoption. And then secondly, just also tokenization, and we've got some skin in the game as Luno, because when BlackRock launched the Biddle Fund, we put some of Luno's working capital into the Biddle Fund to learn, to see how the inflows work, how the yield works, to actually learn real time. And I think, a couple of months ago in August, we launched tokenized stocks, which is a digital representation of a real share. You don't necessarily get voting rights, but you get to share in the dividends that's paid by those companies, etc. So after launching tokenized stocks, we've got around 25,000 customers or investors that have invested in stocks, and around 105 million rands worth of assets that have been invested in those stocks. But the real interesting part there is we've been inundated with requests from institutions, from asset managers, to now want to learn more about the tokenization of other real-world assets and of investment funds like money markets in SA. So I do think that's probably the next wave. We've got Sean here as well, who's also directly involved in that part of the growth. So I think tokenization, to Badi's point, and stablecoins, they are really, I think, two of the hottest trends, and it's a privilege, to be here and to see that play out in real time. Yeah.
It's really exciting when you talk about that, because then the use cases are real and it makes sense. But you sit and think, okay, for institutions, yes, settlement becomes instant, it becomes borderless, it's super exciting. but does the man on the street really know about it? Because yes, the people in this room are more informed than the average person, but what more is needed to actually create, to bridge that divide and to educate people? So Yaliwe, maybe you can tell us a little bit about that. Is there special campaigns that needs to be launched, or what do we do to actually lift the educational levels to inform people about this?
Okay, so I wouldn't say there's special campaigns that are needed. I would say people need to be on the ground. People need to speak to the people and get to understand them. Having interacted with people in communities that you'd not think about, and also having interacted with institutions and governments, you get to understand that even the person on the ground would grasp something way faster than maybe a government person would, right? We've sat in rooms where we've educated government because obviously we want to educate them so that when they make these rules and regulations, they're not making them from a point of, that thing is scary, I don't understand it. But they're doing it because they understand fully, and the decision they're making is because they know why they're doing it. But if you look at the people on the ground, they are expectant, they're curious, and they want something that will change their lives. I'll give you an example. When we did a pilot project in Zambia, the Social Good Pilot Project, we walked the streets. I don't know the people that are familiar with Zambia. We walked the streets of Kalingalinga, Mtendere. Those are places where people hardly go to. And there was one woman that still sticks on my mind today. She was selling on the street, and we spoke to her about this stuff. She said, you know what, I don't understand, but I want to come to class tomorrow. Fetched her, took her to the classroom. The next day, she said, I don't have a smartphone, but my daughter does. I'm going to bring my daughter tomorrow. The next day, she brought 50 other people to the class. It's because they saw value, right? They saw that this thing is something that once we embrace it, the movement of money, yes, transaction fees, but also it could change their lives. So we need to be on the ground because not everybody has the access that we have, the access to information. And one thing that drove me to be part of this blockchain ecosystem was the inclusivity, because it opened doors to everybody. So if we say only us who are here get to understand, we understand it way better, it's not being as inclusive as it's supposed to be. So we need to go down and speak to the people on the ground in different, whether it's colleges, on the streets, institutions, governments, get them to understand what this beast is. Basically, that's what I would say.
And that makes sense. So that would be the starting point. Let's get the education right. Let's get people understanding. But once we move from education, we actually need to move into action. We need to move into investment. You need infrastructure. You need the institutions to buy in beyond the people. So let's then move into the next round of questioning and get all of your perspectives on it. What is needed to make this real, to make it a reality, to balance the system? So Badi, let's start on that side also. From your perspective, what do we need to do?
Well, it's already happening. So we were talking about institutional adoption. The vision, there's vision, but also the vision comes into reality when institutions come into the picture. Because for many years, crypto has been very retail-driven, probably passionate communities and early adopters and so on. But things change when institutions come in, right? So you can see, we heard that ABSA has custody now with Ripple, and we are aware of many banks and PSPs integrating digital assets into their infrastructure, right? So that is happening. And tokenization. So we already have tokenized private credit on Valor, so you can buy and sell tokenized private credit and tokenized US stocks as well, just like Marius was saying on their platform. So tokenizing real world assets, we're already seeing institutions come into the picture. And also, Valor is a CASP license holder as a TPP, and recently, just a couple of days ago, we announced that we received the ODP license. So we are under the same kind of scrutiny that any traditional financial institution would be under. So when you bring in custody, that's custody with liquidity and compliance, then that is like the kind of combination that institutions get attracted to and bring in the capital. So it creates trust, and trust creates capital flow, and capital flow benefits everybody. Because not just the institutions. When the institutions come in, retail also wins. So that is the trend we are actually seeing in reality, and it is already happening and continue to happen. And it's also fueled by favorable regulations across the globe. You know, since Trump has come into power and he has been a favorable narrative around crypto, regulations are becoming more favorable from the West, and then it trickling down into the rest of the world. And South Africa has created a benchmark licensing framework for the rest of the continent, and we're very proud and very blessed to be part of this kind of ecosystem.
No, definitely. And I think the fundamental that you talk about is trust, because you are dealing with financial systems, and this is what is critically important to actually build and be that catalyst for change. So Marius, anything you would like to add? What further investment do you think we need to consider, particularly with our context?
Yeah, I think I would reiterate Badi's points. I think firstly, the foundational layer really sits with compliance, security, risk management, right? So we saw the FTX saga from a couple of years ago, which really put the spotlight on risk management and building sustainable businesses. And I think that's been the one sort of value that's underpinned Luno's journey over the last 12 or 13 years. Integrity is extremely important. So I'm not only talking about actual monetary investment, but actually investment in your brand. So integrity, doing what you say you're doing, building that trust to say that, listen, the assets that you store on our platform is accounted for, it's stored one-to-one. That's really important. So the compliance, the governance layer, another example would be Luno's coin selection criteria process, where each new coin or asset that's added onto the platform goes through quite a robust process through a very specific committee that then authorizes those coins. But then, as Badi also said, it's the foundational layer, but then also it's the two really important aspects is custody and liquidity. On the custody front, we're seeing local crypto businesses like Luno leveraging our custody stack that we've built up since 2013, and now providing that also to institutions. And on the liquidity side, we've seen the emergence of professional trading desks that are able to serve large institutions, large orders, so that institutions don't have to trade through an API or through a retail app. So we're seeing the custody and the trade execution infrastructure also developing at quite a rapid pace. But then the last bit really is regulation, and I think, as Badi said, we've made tremendous progress in that regard. But now to enable the next layer of institutional adoption in SA, for example, the listing of a Bitcoin or any other crypto-backed ETFs on the JSE, that is now I would say the next phase of institutional adoption. And the JSE is doing an excellent job. Just 2 weeks ago, they announced the draft listing requirements for asset managers or product issuers that want to issue and list a Bitcoin ETF on the JSE. So that's really a really good step forward. And I know they're also in active engagement with the SA Reserve Bank and financial surveillance around that as well. So I think all the ingredients are there, and there's progress on all those fronts.
And I think you make excellent points, because regulation and compliance do follow innovation. They shouldn't stifle it. I know sometimes we may feel it does, but it all needs to come together, and those building blocks are being put in place. Maybe, Yaliwe, if you can just add on to that and say, because I think a lot of people have anxiety, we won't say who or what, but maybe from a retail perspective, even institutional perspective, how do we bridge that gap and actually get people along the journey and say, make this real, leverage it, utilize it, join this journey?
Okay, I would say strategic collaboration. I think that is very important, right? Because you could have a great product, you're offering a great service, but you need the strategic collaboration, and that will also lead to accessibility. So you need to understand that if we collaborate with certain stakeholders or certain communities or certain institutions, then we give you more accessibility. I'll give an example of the telcos. There's one thing that they've done that we're still struggling with, whether it's from the banking sector or from our space, is making sure that each and every person is included. Why? Whenever you go to a country where there's a high usage of mobile money, the moment you buy a SIM card, they ask you whether you like to open a mobile money account, right? When you open that mobile money account, you're going to start transacting right there and then. Obviously, they will do their KYC, but there's accessibility. So we need to have a lot of strategic collaboration, and that will lead to accessibility and then adoption.
Thanks so much. I'm sure we could talk about this topic the whole afternoon. I know Chipo won't allow me to do that. And I also want to open up to the audience for questions. The key thing, though, I think you're realizing from the conversation is that there is definitely an ecosystem effect. It's definitely about collaboration. It's definitely about everyone working together in order to enable this. So before, I've got quite a few more questions for my panelists, but I just wanted to pause and ask if there are any questions from the audience, and I see there is. So while we're keeping you all awake and entertained, let's field some questions.
Thanks, me again. The word keeps coming throughout all the talks is around regulation, and I think that's the part that's kind of hasn't grown as much legs as everything else. So I think to Badi and Marius, I think you guys square in trying to navigate an unregulated but partially regulated world. We know in South Africa we don't have a stablecoin regulatory framework like the Genius Act in the US. We also don't have a tokenization framework like MiCA in the EU. We have very fundamental crypto regulation at this point. In your opinion, should the regulators quickly rush and try get something in draft on the table for everyone to start considering from a tokenization and stablecoin perspective, or should they wait until it plays out in the South African market so that they can regulate it more effectively?
I'll take that first. Well, I think, as history has shown us, regulations are usually slower to follow the innovations. You can look at the example of the internet. So internet came about and e-commerce became a thing before regulations came in. In fact, there was a drive to ban e-commerce at a certain point of time before regulations stepped in a few years later. So imagine banning e-commerce, right? So I think it's unthinkable. So similarly, I wouldn't say that regulators have to jump in and keep up with the pace of innovation, but also not let it linger for too long, right? So if you look at Africa as a continent, there is no framework for licensing in any particular jurisdictions except South Africa. So we are already made a huge progress in licensing crypto asset service providers. And I think maybe the regulators are quite capable locally to create the framework that is required for tokenization, and we're seeing clear trends like we talked about in the global landscape from the European region as well as in the US region, so that it's easy to adapt and adopt a certain set of regulatory framework for South Africa. So I would say create a balanced regulatory framework that does not stifle innovation and do not create unique barriers and artificial barriers for innovation, because we do see that as well. Like, for example, in India, regulators are on the other side of the spectrum where things have taken a beating in terms of people and brain power leaving the country and setting up shop elsewhere. So we also don't want that to happen. So it is a balancing act, but I think the regulators are doing a good job here, and there are many examples for them to follow.
Yeah, I think the SA Reserve Bank already follows quite a mature approach. They've never rushed with any regulations into the local market. I mean, in our journey in other emerging markets, Nigeria is to the contrary, a market where regulators have tried to rush into the market, and they've implemented rules or bans that have completely stifled the market, and it's actually moved the market. Before certain bans, the transaction activity were 80% on centralized crypto exchanges like Luno and others. And after certain regulations that were rushed to the market, the transaction activity shift 20% centralized exchanges, 80% foreign peer-to-peer exchanges or platforms. So I would definitely also advocate for a mature, slower approach, and really, regulate areas where there are clear risks, not perceived risks, but where there's an actual risk that needs to be addressed or where there needs to be a safeguard put around it. Focus on that actual risks, and to understand the risks, they need to spend time in the market and time with the operators to understand those risks.
And just to add another dimension, I'm not here to speak on behalf of the central bank, but I just do want to add that there's a new era of central banking that is stepping out across the globe and even in South Africa, is that they are trying to be catalysts for change, to actually be more quicker to market, to respond, to provide these enabling structures in place. So yes, they mustn't be too quick, but Paul even mentioned it when he was talking about the payments ecosystem modernization. And the Reserve Bank is also initiating various other initiatives. So I do think you're going to see a new step change coming from the Reserve Bank, trying to see what's happening, because at the end of the day, there is monetary policy, financial stability we need to think about, that we can't bring risks into the system, but we also do not stifle innovation. So I think these are the bigger things we also do need to consider. But I think we are out of time. Or can we take one more question?
One more question over here.
Yeah, one more question over there. You've already got the mic, so over to you.
Yeah, thanks for the good chat, guys, and ladies. Just on the topic of stablecoins, we've seen reports saying that African exchanges, the majority of the flow tends to be from fiat to stablecoin and vice versa. So I'm actually just curious as to what is the proportion of the trade that's happening on your exchanges that is people switching into and out of stablecoins, and maybe as a corollary, how much of that is kind of real utility, so people getting into stablecoins for kind of the store value or payments use cases versus facilitating like the hot money flows that we see with like arbitrage operations and that kind of thing?
So I think the stablecoin volumes on exchanges, I think it's a little bit opaque still, the total volumes, because the majority of stablecoin volumes across Africa flows through trading desks in many African markets, right? So markets like the Francophone region, Morocco, Kenya, Uganda, Malawi, Zambia, there are stablecoin flows in each and every of these markets. But because of a lack of regulation and a lack of appetite from banks to act as the on-ramps and the off-ramps into these exchanges, local operators have filled that void that centralized exchanges can also fill. So that's why I'm saying it's a little bit, it's difficult to put your finger on the actual true volumes that flows. But what I can say is that on Luno, especially in markets like Nigeria, we've seen a month-on-month increase in interest. We've seen the ticket size, the trade size, especially through our trading desk in Nigeria, increase beyond $50,000 per trade, and that's an indication of businesses that utilize stablecoins to facilitate very specific needs, in order to continue to conduct their business that the existing financial system cannot necessarily meet. One example I can give you is we recently spoke to a company that needed access to foreign currency in Nigeria, and they had to open a bank account with 20 different Nigerian banks in order to improve their chances of getting access to FX, collectively or through any single bank. And it's just not the way to drive economic growth and to build. And so it's absolutely driven from need. It's a need driver that's driving the adoption.
Just to add to that, when stable coins were introduced, USDT in particular, it created a parallel ecosystem for the longest time, but it's no longer a parallel ecosystem. It's getting woven into the traditional institutions, financial settlements, and things like that. And as this convergence from crypto to traditional systems we're seeing that convergence happen, the volumes have grown. And this is all public data. You can see that the largest traded pair on Valor is USDTs, right? So RAND for USDT. And in terms of The other big US dollar-based stablecoin, USDC, we are globally one of the top 10 the top 10 minters globally. And that's primarily driven by the arbitrage use case where a lot of the flows coming out of South Africa and minting in USDC and trading for arbitrage. And that is also driving the volumes up for stablecoins on Vala. So I think it's a combination of multiple factors, and like we said, the key trends is stablecoin. So, and we are seeing that in reality in terms of the volumes on the exchanges.
Excellent. Thanks so much. And thanks to my panelists for sharing your insights today. And hopefully all of you know a little bit more before we started the panel. Thank you so much.
Excellent. Thank you so much, guys.